Welcome back to We Talk Money, guys. We've been off for a couple of weeks, but we're back and we've got a lot to cover today. Trav, how's it going?
Great. Glad to be here.
Yeah, man. We just had the Fed announce that they're cutting rates to 0% again, I believe, right?
Don't we wish, man? I long for those days of equity markets ripping, 4-5% on Fed optimism.
Yeah. Well, it looks like they're staying steady for now, but we'll talk about the probabilities. Looks like 50-50 for the next either staying steady or cutting. But I'm coming to you guys from Mexico City. My first time here. I've been having a blast. I think it's just a really cool place. Trav, I know we've had some friends that have spent some time here and they love it too. What an underrated place. Like, it was never on my radar. And, the media just loves to demonize Mexico. But I think this is probably one of the most underrated places I've ever been.
Yeah, what a story. And you wrote about Mexico in the Daily Doe a few issues back. And, Mexico is benefiting from a lot of different trends and things like nearshoring, but also just an upswell of economies doing better in Latin America, Central America, Mexico, the whole region, really. And there's a lot to like there.
Absolutely,
sure.
man. I mean, it's booming, and there's neighborhoods that feel safer than your average American city, and the food scene here and just the energy and the genuine kindness of people. I just love it. So I plan on spending hopefully a lot more time here in the future.
Yeah.
Yeah, man. But one thing I was thinking a lot about over the past couple of weeks, as I've seen like kind of extremes of extreme wealth here and also poverty, and just seeing kind of what's happening in the US with like the shrinking middle class, and just trying to really define like what financial freedom is. And I know, it means different things to different people, and some people never even give themselves a chance to believe that they can actually achieve it. And so something I've been thinking about is the fact that, Trav, you and I both know a lot of people that have built real wealth doing a bunch of different stuff, right? I just tweeted this a couple of days ago, said, I've had friends get rich buying Bitcoin, trading stocks, trading altcoins, building startups, even working a W-2 job, or buying real estate, or building cash flowing businesses. There's so many ways to skin the cat of building wealth. But everybody I know that has achieved financial freedom has one thing in common, and that's that they built a portfolio of assets that grows at a higher rate than their lifestyle burn. That's true freedom, right? And we know a lot of people, like in the FIRE movement, the financial independence, retire early, they talk about these types of things, and there's different levels to the game, right? There's people that want lean FIRE, where they want to retire on as little amount of money as possible. And then you have fat FIRE, people that are super wealthy. For me, the way that I kind of define this, and I wanted to get your opinion on this, is, if you have a portfolio that grows at a higher rate than your dream lifestyle burn, whatever that is, right? That could be something extravagant and having multiple houses and flying private, or it could mean just having a simple condo in Costa Rica and living cheaply, right? But if you define first what your dream lifestyle is, and then you build a portfolio of assets, it could be paper assets like stocks or Bitcoin, it could be cash flowing businesses, real estate, whatever. If your portfolio can pay for that, that's financial freedom. And I don't know. I'm super passionate about like helping people get there. How do you define financial freedom?
Yeah, I mean, I think you touched on a lot of the major components of how I think about it. Financial freedom meaning to me that, you can have freedom over your time, and not just like, it's not just a numbers game, but it's how does it free up your lifestyle and your time also as well. And so for me, I value, for instance, getting paid less, but having more time freedom, rather than, working at a hedge fund for 80, 90 hours a week, not seeing as much of my family, or getting to go play pickleball in the middle of the week. That would be less enjoyable for me, even though I'd make more money. And we've talked about that. So yeah, for me, it's not only the numbers, and you do want to make sure the numbers work. You don't want to end up at a retirement age and all of a sudden be in an oh shit moment and not have enough. And then be scrambling to figure out how you make that work. But on the other side of things, I think, people get caught up too much in the numbers sometimes, especially on the wealthier side. People will often, chase bigger and bigger numbers, bigger and bigger lifestyle. And then they come to a point where they're like, wait, why am I doing this? And why do I need more stuff? I mean, I even listen to things like, say, our buddy Sam's podcast, My First Million, and to hear, people that are worth 100 million plus on that podcast talk about how they're still not comfortable. They still don't feel secure in their financial situation. I'm like, are you crazy? Like, take a step back for a minute, or maybe adjust one of those variables in your life, because something's wrong if you're worth 9 figures and, you're still freaking out about the numbers, right?
Yeah. Yeah. Lifestyle creep is real. And that's why I think it makes sense to maybe like just envision what your perfect average day is and what it really costs to support that. And I think a lot of people would figure out they actually don't need maybe as much money as they think they do. I don't know. I mean, some people would love to live extravagant lifestyles, but I think, like you said, I mean, most people just want ownership over their time and freedom. And it doesn't take a $1 portfolio to make that happen for a lot of people.
Yeah. Yeah. And so you mentioned, there's within this like wealth building machine, there's a couple of key variables that you can tweak to sort of your liking. Like there's no one blueprint that makes sense for everyone. So you can tweak things like maybe you go into a hustle period where you want to increase your income streams or work on a business or try to, bootstrap something that can eventually kick off cash flow. Or, maybe you want to dial down the lifestyle, or maybe you want to live in a lower cost country, like you said, for a while. Maybe for some people, it might be taking on, more a second job even to try to like supplement for a while before they can start to coast more. So there's these major variables that we think about kind of within the machine, whether that's like a lifestyle tweak, an income tweak, maybe it's taking more or less risk on the financial portfolio side. So there's a lot of different, things that you can do, but I think, we could probably bucket them into probably 4 or 5 major variables. And then within each of those, you kind of have to figure out where you want to turn the dial on each one.
Yeah, absolutely. And I'll just pull up the article that I wrote in the Daily Doe. And, this was kind of the process that I think people could go through is like start by figuring out your annual dream lifestyle costs, then calculate your portfolio's estimated returns, and then choose a withdrawal rate that's lower than your average returns. So like an example would be like on a $10 million portfolio, if you had a 300K a year dream lifestyle burn, and let's say you were averaging 10% after inflation returns, if you withdraw 3% a year, that's obviously way less than the average return. And granted, this is barring any significant like principal reductions or market crashes, right? So there's different like Monte Carlo simulations you can run, and you can get pretty complex with this. But that's why I think if you have like a pretty low withdrawal rate compared to your returns, like that buffer is where that kind of escape velocity comes in, where even if you're living your dream lifestyle and paying for that through your portfolio, if your returns are outpacing that, you're going to continue to build wealth without having to add more principal to it. And one thing that, I hear from a lot of Bitcoiners about is like, well, how much Bitcoin do we think we need to retire? Right. And not 100% of my portfolio is in Bitcoin, but it is a large portion of my net worth. And, you can run different simulations there as well. I know some people are calculating, these kind of like, these scenarios where they're like, man, what if Bitcoin's $1 million a coin, right? And for me, I asked the question, like, what does the world look like if Bitcoin is $1 million a coin? Does that mean we had hyperinflation? What does $1 million get you, right? Like there's a lot of questions to ask around that. So I tend to look at like more of a base case of like, look, Bitcoin's been annualizing, or the returns over the past decade annualized are about 125%. What if it's only a fraction of that for the next decade, 25% or something, right? And you can run these different projections and figure out like, okay, of my portfolio that's Bitcoin, maybe I work in a higher expected return and then blend that with stock market returns, or like you said, hustle income that you can add to it. There's just so many ways. And I guess I'm just kind of talking this out with you in a public forum, just trying to think about like, what are the different ways that somebody could attack this? And at the end of the day, I think it just comes down to like, just first deciding it's something you want to do and deciding what you think your lifestyle burn's going to be, and then working like hell to get to that level.
Yeah, great points. I mean, I think it's worth, actually having a day that you set aside for doing this and actually maybe even punching some numbers in a spreadsheet. And I love what you said about scenario analysis, because we do this when we value an individual stock. And so you can do scenario analysis on your own financial position and say, particularly for things like the base case and the downside case, and say, well, what if I don't earn 10% or 20% on my investments over the next 10, 20 years? What if it's 5%? What if I'm right at the level of inflation? What if inflation becomes such a problem that my returns are barely covering it? What does that mean? And so you can kind of look at those downside cases too to figure out, what does that look like?
Yeah. Yeah. Well said. Yeah. I don't know. I would just encourage people to maybe, like you said, take a day, sit down, figure this out, and make a decision to start moving towards that. And that's really what our wealth building community is all about, is showing people ways to actually achieve that, right? Through either trading or longer term investing or building businesses, right? There's so many ways to skin the cat. And I think we've just got a great group of guys and ladies that are tackling it from different angles. So awesome. All right, let's jump into the markets. So a little bit of a kind of a quiet week this week. We've had a bounce in Bitcoin. Stocks are hovering around all-time highs. The Fed just left rates at 5.5. What else is happening? I know we're kind of smack dab in the middle of earnings season. So what's the vibe on the earnings side? I know you wrote about that in the Daily Doe with some of the trillion-dollar companies. What are we seeing on that front?
Yeah, and apologies if there's noise in my background. It sounds like there's like a cement truck right outside my house. I don't know why that is,
No
but all of a
worries.
sudden it decided to show up right as we're recording. So yeah, earnings season so far, I think it's been a bit of a mixed bag, and a perfect example of that were Google and Microsoft last night. Both delivered what looked like very strong reports. Wrote about those in the Daily Doe, did a summary, but basically both are growing top line double digits. Both are growing earnings per share at very high rates. In Microsoft's case, it was over 30%. In Google's case, it was over 50% year over year. Now, they probably will slow somewhat, but Microsoft is still guiding to growing like 14% next quarter. So still looks pretty good in terms of actual business results. But both of those stocks were up over 50% in the past year. And so the stocks had baked in a lot of that already. And so today you're seeing Google and Microsoft actually sell off, particularly Google down about 6% so far today. And that's just kind of one of those classic, sell the news events, because results were fine. In fact, they beat, analysts' expectations, but was it enough to get investors incrementally excited? Doesn't appear so today. Now, I don't think there was anything too concerning in any of those reports. Google's going to spend obviously a lot more on AI this year, so they're going to up their CapEx budget. But, really in the grand scheme of things, the reports look solid, and the stocks were probably due for a breather. So that's what we see on the big techs. On Thursday, tomorrow, we've got a couple of the other trillion-dollar market cap companies reporting as well. So we'll see Amazon, Apple, and Meta. We'll see how those react. But earlier in the earnings season, we saw like Netflix rise after earnings. We saw Tesla dump after earnings. So again, it's a bit of a mixed bag so far. And I would say generally nothing I'm super concerned about, but we'll just have to keep watching the reactions as we get deeper into the earnings season.
Yeah, Trev, tell me what you think of this idea. Just like not doing research anymore and just tracking Pelosi. I mean, she did put a $5 million bet options play on Nvidia, and I think she's up like 28 or 30% on that play.
Yeah, she has trounced the S&P's return, that's for sure. I think it's also her husband who actively trades in her accounts. So yeah, Paul Pelosi or whoever's running that thing is one of the greatest traders of the last decade.
Is it insider trading? Is this illegal, or is this just a loophole that should be closed?
I would say both. I would say it's probably technically legal, but certainly very much insider trading on many fronts. And there are a couple of accounts on Twitter that follow these trades, not only for Pelosi but also for all the other senators and congressmen. And there are a number of shady trades that pop up that, in retrospect, look very much like insider trading. Now, Congress would have to pass the Stock Act or some other similar law to actually stop themselves from doing this. And so there's a real misaligned incentives problem, principal agent problem, as we call it in economics, that exists here. So how do you get the police, or how do you get the regulators to regulate themselves? I don't know if you can. At some point, maybe Americans get fed up enough But it is so frustrating to see that these people are just illegally insider trading all the time.
Very strange, right? I mean, they have information about government spending and, which companies are going to get big grants and different things like that. And to make moves ahead of the public based on that just seems at a minimum disgusting and gross, but probably closer to, yeah, should be absolutely illegal.
Yeah. Yeah. And they wonder why, trust in our Congress people continues to deteriorate to just all-time low levels. I mean,
Yeah,
it's sickening.
ridiculous. All right. Well, so overall, what's the vibe in earnings season, kind of outside, I guess, the majors? Is it still kind of a mixed bag, or is it good, but people just had so high expectations that reality's trying to catch up with the market?
Yeah, I think in big tech in particular, we saw the NASDAQ was hitting fresh all-time highs last week. The megas have been driving a lot of the performance, not only last year, but also early here in January. So we do see actually some decent moves out of big tech. Like, GM was up after earnings. I believe like Starbucks was up after earnings. And the earnings results so far have been pretty positive. I think overall, we're still expecting 300 plus S&P 500 companies to grow earnings this quarter and next. So, that's still pretty good overall. But
Mhm.
yeah, I think, some of the hottest names, have gotten a little bit ridiculous, even Nvidia and some of the AI stuff. I said at the beginning of the year, AI will remain a hot theme this year. And wow, has it remained hot? Like in the first month of the year, like Supermicro, SMCI, another company, they guided above expectations and the stock has just gone bananas. So it's really interesting to see, because in this market, there are still a lot of stocks that look cheap or look reasonable on valuations. But then you've got this whole other side of the market where it's just like, it feels like they're just going up every day and valuation doesn't matter. So it's a really interesting environment and very tough to make sense of as an active stock picker.
Yeah. Makes sense. Bitcoin and alts in general have also been kind of a mixed bag over the past couple of weeks. Looking at the total three chart here, alts have just been bouncing around that kind of 450 billion market cap level. And what was really interesting, let's just kind of go step by step here through like the price action over the last couple of weeks. As we know, the ETF got approved here in, just a couple of weeks ago in early January. And then there was a bit of a capitulation off of this 48K resistance level, which is resistance seen from the daily chart or the yearly chart. And then we know there were a lot of outflows from grayscale, which caused some selling pressure. And that has seemed to be slowing down. And we noticed that Bitcoin got a bounce off of the 100 period moving average. So it was funny. It was like all this euphoria prior to and during the ETF approval, and then all this like panic and like, when you zoom out and you just look at, Fibonacci retracement levels and moving averages, I mean, this is just regular price action. And there's always a narrative behind it, right? Which the narrative was, oh, Grayscale is liquidating billions and billions of dollars. But it seems like the other ETFs have been absorbing that selling pressure and price has gotten a nice bounce. And so we're kind of right back to equilibrium around that 43K price zone. And I wrote about this in today's Daily Doe, just talking about the kind of a reality check that, a lot of people still don't realize that Bitcoin's actually been in a bull market for over a full year. And that's not my opinion. That's actually how we like technically define a bull market. We've been above the moving averages, making higher highs, higher lows. And there was a little bit of time last summer where we got below the moving averages, but we held up that 25K pivot low support zone. So really ever since, mid-January 2023, Bitcoin's just been trucking higher in a very beautiful bull trend. And I expect that to continue until something fails. And right now, if you look at the yearly chart, we've got a lot of open air. So if we get above this 48K, I think we're going to be at or close to the prior all-time high around 70K pretty quickly. And we've got about a little less than 90 days to the halving. So far, bull market's still intact. We've got the ETFs. Do we have a black swan ahead of us? Maybe, but until something changes, I'm bullish.
Well said.
Yeah. Yeah. And then, I mean, as far as alts go, it's been kind of still popcorn season. We've had a few alts that continue to show strength. I took a little profit on Solana. Didn't get the best fill on this one, but I'll just show you guys this. I sold half of my breakout trade from the 50s here around the 80s, and I'm still holding half of that with my main target up here on 150. But if you look at like a lot of the alt BTC charts, there's still a lot of tickers that are just not showing relative strength over Bitcoin. Solana, you can see is one of maybe 10 to 15 charts that's actually had real growth over Bitcoin. So I've still been just like super selective on alt plays, and just kind of biased more towards Bitcoin. But it has been nice to get a little bit of alpha here in the alt market. What are you seeing out there, Trav? What are you guys trading? I know Nikki's not with us today, but what have you guys been looking at? If you had any position changes or any kind of sectors or theses that you've been thinking about or looking to trade?
Yeah, so we've had some nice continuations of trades from last year and year before. So cannabis has been slowly grinding higher ahead of possible, regulatory wins this year. And then we've also had uranium doing quite well. So the, uranium spot price went over $100 per pound, which was, up more than like 3x in the past 3 years. So that's been nice. It's just been continually gaining momentum. So those trades have been working out pretty well. A couple of the other core positions just slowly grinding higher. I did have one loss with the Spirit Airlines merger arb situation, which I wrote about in the Daily Doe, and that one was just an unfortunate outcome. I didn't price those probabilities correctly, I guess. We ended up with a loss on that one. So luckily position size that relatively small, so that didn't hurt too bad. But yeah, I mean, I'm still pretty interested in what happens here with Chinese stocks. That's been one theme for 2024 that's pretty fresh for me, where the sentiment is literally just so rock bottom bad, and I understand why, and we all know the reasons why. And U.S.-China relations not great. Trump potentially being in the mix for the presidency again, probably not great for U.S.-China relations either. But overall, the Chinese are trying to pump money into their own equity markets. They're trying to stabilize markets. I think actually we're probably closer to the property crisis being at a bottom in China. But Western media and Western investors still think that the property crisis is to come, because we just saw, like this week, for instance, Evergrande file for reorganization, basically bankruptcy. But Evergrande's been like a penny stock for like a year. So, it's kind of like, it's sort of like this has been well telegraphed for the past 2 or 3 years, the meltdown in the Chinese property sector. There were excesses, there's deleveraging and restructurings that are taking place. But I think we're closer to the bottom in terms of the property sector affecting the Chinese market. I mean, Chinese stocks are at all-time lows in terms of valuation relative to the rest of the world. They're heavily underowned globally. Even Chinese domestic investors themselves were seeing outflows from Chinese funds into US and Japanese funds. So it's interesting. Just the other day on Seeking Alpha, I saw somebody writing about Alibaba, which trades for 8 times earnings and is now buying back stock and paying a dividend, and they capitulated and they sold. And I'm like, I think they are closer to selling the bottom than anything else here. So, I'm not expecting these things to be at NVIDIA multiples anytime soon. But I think it sets up for a really interesting potential here, because sentiment is so washed out, particularly among Western media and Western investors, who I frankly don't think understand the Chinese situation well at all. And there's just like this bad narrative, this narrative that just gets repeated over and over, the same talking points that to me are old, not fresh. So if I'm looking at
what are those talking points?
Talking points would be Chinese property sector is going to create a massive crisis in China. The economy is going to fall apart. People are looking at what happened in the US and during the GFC in 08, 09. Go back and look at that. At the depths of the crisis in late 08, 09 was some of the best times to buy stocks ever in the US market.
Right.
And again, I think we're closer to the bottom of that crisis, which has been ongoing for 2 or 3 years now already. So there's that talking point, the U.S.-China relations talking point. As that deteriorates, do you really want to be invested in Chinese stocks as a Western investor? That, I think, is, definitely worthy of consideration, particularly if you're talking about position sizing. And then there's, of course, the question of, corporate governance with China. And that remains a concern, although there's been improvements even with that. Like auditors now from Western audit firms can actually go and audit Chinese companies And oh, by the way, with Chinese companies actually paying dividends and buying back stock now, you finally have capital returns to shareholders. And so, yeah, I think, there's also some question too as to growth in China. Like, is the economy just moribund? Are their demographics going to keep the economy from growing? But we've seen signs, things like retail sales picking up in China and the Chinese government trying to stimulate. So I think there is, again, potential here with just a mismatch in sentiment versus like green shoots. Like, in 2008, 2009 in the US, it was hard to see the green shoots. Everyone was bearish. There were a lot of reasons to be bearish. The economy continued to decline for a while after the market bottomed. But again, sometimes the best time to buy is when it feels shitty.
Yeah, absolutely. And sometimes it can be hard, like thinking about China, like what is overblown, just bad market sentiment,
Yeah.
and what is a real inherent risk. Like I know one thing you've talked a lot about is the fact, like, do you actually really own Chinese companies if you buy their stocks, right?
Yeah.
Like the structure there is a little bit different. Can you speak to that?
Yeah. Yeah. For a US based investor, typically we're investing in the ADRs or basically the Chinese shares that trade on US markets. And one of the issues with those ADRs is if you look at the actual corporate structure, you essentially are owning equity in a holding company based in the Caymans or in some Bermudan country that has an agreement with the actual onshore Chinese company to essentially transfer profits between the two entities. And in an oh shit scenario where the U.S. and China go into World War III, which I'm not saying that's going to happen, but if that were to happen, there is a serious, real probability that those Cayman subsidiaries get shut off, that U.S. shareholders get shut out, and that the Chinese essentially take those assets back for themselves. So that is a risk. And again, that's why I've said, you got to properly position size. And I will say, if you look at what happened with Russian stocks, for instance, Russian stocks were trading at like 5 times earnings, just before the Ukraine invasion. And they looked very cheap. They looked like bargains. But if you bought them right around that Ukraine invasion time, most of those were delisted, and you didn't have really any recourse, and so you could have gotten wiped. And again, that's why I think we have to be mindful of a situation like that where downside, I probably would price at 0, and so that does really constrain position sizing for me. But it also doesn't mean that there isn't something here and there isn't a trade here, because like I said, one thing that gives me some comfort with the ADR structure scenario is that there is capital now flowing from these Chinese companies into US investor pockets via dividends and share repurchases. I'd like to see more of that. And I think there is potential for companies like Alibaba and JD to direct more of their excess capital into buybacks and dividends. If we see that, I think that'll be a very positive confirmation that this trade has legs. But to say, I think to sum it up, do I feel 100% comfortable this thing's going to work out great and it's going to be an amazing trade? No. There are things that definitely worry me on the risk side. However, I also have to look at the bull case and the upside and say, I think that there's some skewed potential here for upside that a lot of investors are overlooking because they've been burned over the past 3 years sitting in Chinese stocks.
Gotcha. So are you still waiting for something to go, quote unquote, heavier into Chinese stocks, or have you already started to pull the trigger, or where are you, or where do you think the timing is right now?
Yeah, it's really interesting. That's a great question, because what we're seeing is we've started to see some flows from some of the Chinese pensions into the Hong Kong market just in the past few trading sessions. I think those flows will continue to rise. And so we have like a situation right now where, there's a multi-$100 billion essentially stimulus package happening within the Chinese market that I don't think has really impacted stocks very much yet, but still has the potential to push them higher. Essentially like a stimulus package, essentially thinking about like, what happens if the government prints money and puts it directly into equity markets and supports the equity market. I think we're just still in the front end of that. So what I'm watching for over the next 1, 2, 3 months is to see if there's a continuation of that and if we get better price structure in a lot of these stocks, because we aren't convinced yet that we've actually fully bottomed. So I would like to see some price confirmation to actually maybe add a little bit to the position size. My size is quite small, and it's mostly via call options right now. So that's definitely, I think price confirmation is a big one that we'd like to see. As far as the fundamentals, it comes down to, does the stimulus package actually start to move the needle? And then also, I think we could see individual company announcements in the next earnings reports from some of these Chinese companies in the next 1 month. Particularly what I'd like to see is an increase in dividends and buybacks. So if we get some of those things happening, and then potentially, if you can also get some faster revenue growth on top of that at the actual companies, then I think you've got the combination of factors for a nice trade.
Nice. Yeah. Whenever we just look at like the technicals, if we look at Alibaba, for example, we're back at, decade lows, decade support. And it's always hard to know like exactly where the bottom's going to be. But as of right now, it's just been selling off, lower lows, lower highs. There hasn't been any kind of like major capitulation event. It just kind of looks like it's just kind of grinding lower. So yeah, I think that's kind of a smart thing to kind of think about is, okay, can we get some price confirmation? Can we break resistance and see like even like kind of a shorter term shift in the trend to maybe break out of an accumulation range to show confirmation that, direction is shifting? Because as we know, when we're in these kind of like long kisses of death, they can last a lot longer than people realize. So timing these are definitely challenging.
Well said. Yeah, it would be nice to have a capitulation event, pull in buyers like the Rockies of the world
Yeah.
who love
The
buying
buyers of
those.
last resort.
That's right. Yeah, as you've coined it. So that would be nice actually to actually have like a nasty, wick down to really find the true bottom, and then we start to rally from there. Maybe that's what it will take. But yeah,
Yeah.
watching it closely. This is not a next week trade for me. Like my options go out to 2025. So we'll see.
Oh, okay. Nice.
Yeah.
Cool. What else are you guys seeing in the stock area? Any other kind of key things you want to bring up or?
Well, we're keeping an eye on Tesla. That one's, I think still above where I want to buy it, but definitely some interesting fundamental things happening with the company. The Q4 results look pretty bad. So they also were pretty underwhelming as it relates to 2024. I think their exact wording was something like, we're between growth waves, or in other words, 2024 is a transition year. We're not going to grow as fast as we have, in recent years. And so that I think still has potential for downside. You also had the event recently, just yesterday, in fact, where the Delaware court ruled that Elon's massive 50 billion plus pay package from several years ago was actually ruled to be improperly structured. That's been really interesting and entertaining to watch the back and forth on Twitter about that one. But that could create a
What's
lot
your
more
take on that?
uncertainty. It's interesting. I think so essentially what I think, I think overall that, the Delaware court was right to rule in the sense that the corporate governance at Tesla has been problematic. Like the board, as we've known for many years, is just completely deferential to Elon, really doesn't have much actual board oversight. Like they basically just kind of do what he wants. Now that's worked for Tesla shareholders, right? And so like 80% of Tesla shareholders approved this package, years ago when it was first initially proposed. And so it's sort of like, do you really want to protect the minority shareholders here because Tesla has created so much value for shareholders generally? Like I think Tesla shareholders are right to be a little bit upset that, now they've got to go figure out how to restructure this package or how to, retroactively fix this thing. Which, pretty much seems to be working out for all parties. Elon, shareholders, et cetera, all seem to be mostly happy. And so you have a very small minority base of shareholders here who raised issues. And should we really be using their grievances to kind of restructure something that has worked for most everyone else? So it's really complicated. It's more complicated than Tesla shareholders would like to tell you. I do think the Delaware court, again, I think they're right to raise the issues about corporate governance. And frankly, Tesla needs to fix the corporate governance, get a few actual independent directors on the board. I think it would help overall. It would help to level out Elon's impact and create more, certainty around the company. I think that would be a positive for Tesla. So yeah, I mean, I think overall, they'll figure it out. They'll figure out how to restructure a pay package for Elon that makes sense. And in the end, I think it's just going to be a nothing burger, overall. But in the short run, it does create a lot more uncertainty and angst, and potentially could add to downward pressure on Tesla stock that we've seen recently. Oh, you're on mute.
My bad. There we go.
There we go.
A bull narrative I've been seeing for Tesla recently is the whole humanoid movement. Have you thought much about that? Are you bullish, bearish? You think it's coming soon or way far out, that further than people think? Or do you think it's going to be a meaningful impact? Could it take Tesla to 5 trillion market cap? I'm starting to see some pretty wild predictions out there.
Yeah, it's a moonshot bet, and it's really hard to know how to properly value that today. A Tesla bull is going to tell you that you should put hundreds of billions of dollars of value on that today. I'm obviously someone who's not going to do that. I tend to be a little bit more down to earth and grounded on things like that. But I don't think the option value of that is zero either. So yeah, I mean, I think I would say very, very. I don't think we're going to see the impact of that on Tesla's financials in the next 3 to 4 or 5 years. I think we're talking probably more of a decade time frame. But it's interesting because I think there is a case to be made that at first, I was very skeptical because these things are probably going to cost $50,000, $60,000 to build, right? They're going to be as expensive or more expensive as a car. And you're going to be putting them in a home where they could potentially malfunction and endanger people. So that was my initial reservation. But as I think about it more, I do think even though the cost is high, there are economic models where you can make this make sense, like leasing models, robot sharing, things like that. And so if you could do that and essentially, replace a lot of the labor intensive tasks in and out of the home, whether it's landscaping, whether it's doing dishes, laundry, even construction tasks, things like that, then I think you can make potentially an interesting economic case for these. So yeah, I think there is a lot of potential. I think the range of values is extremely wide. I think people are probably giving Tesla too much credit for the near-term impact of that. But I do think it could be hundreds of billions of dollars of potential market cap if Tesla can prove that these things are viable. So I think we'll know more in like 2 to 3 years, but yeah.
I've seen some movies that kind of scare the shit out of me about those humanoids, but would you buy one if, say, it was like 50 grand? Do you think it'd be worth having?
Ooh, interesting question. I'd be a little bit nervous. I don't think I'd want to be in V1, especially, if you have kids around the house. I don't think that I'd feel great or super comfortable about that in the first iteration. I'd want to see a few generations myself.
If I could get it to ride my tractor and like cut up trees that fall on my property and stuff like that, I think it'd absolutely be worth it, because I still spend a ton of time like doing outside maintenance, which some of that I love, but like it'd be kind of cool. Like if you could have the robot like clean your house every day, or I don't know, go grocery shopping. I don't even know what all the use cases are that Tesla's actually shooting for, but if it could save a couple hours a day and you back out the math, I'm like, yeah, that might have a good ROI.
Yeah. Especially for wealthier households where you want to buy back your time. And yeah, I mean, I could definitely see that.
Yeah, I probably wouldn't leave it in a room alone with my kid or like treat it as a babysitter, but
yeah.
Oh man. Cool. All right. Well, I think we covered a lot of stuff, overall pretty quiet week in the markets. The other thing I was going to point out was how Bitcoin is actually showing relative strength over the NASDAQ again. So for you guys watching the video, or if you're listening to the audio, you can just kind of follow along. If you look at Bitcoin's price compared to the NASDAQ, this is kind of at least for me, a confirming indicator of, just when Bitcoin is in a true bull market. When this chart is flat, that means that Bitcoin is just tracking stocks. What I really like to see for confirmation of strength is Bitcoin to be making gains above stocks. And we saw that happen really last fall. In October is when we kind of broke out of a multi-year kind of consolidation range. And then we saw strength through the end of the year. And then in January, a little bit of a pullback. And we're starting to see that pick up again. So this is one thing one chart that I'll be watching for over the next week or two to see if this can break out again along with the BTC USD chart. So again, I'm bullish until something shifts, and still hunting for opportunities, holding a few alt positions, and just trying not to over manage or, get spooked by, FUD around ETF flows or anything like that. I mean, there's just so much noise around the ETF, where it's like, oh, it was a sell on the news event, and this is going to be so bearish for Bitcoin. And I'm like, is it really though? Are people really just freaking out of, about capital, getting shuffled around? I mean, that's what it felt like to me. Do you think I'm minimalizing that, or is that valid? What do you think?
No, not at all. I mean, I think, yeah, you kind of nailed it. I mean, there was obviously going to be money that shifted out of Grayscale into much, much lower fee ETFs. Like, that's just very rational. So yeah, I don't think that's anything to really be concerned about. Certainly not on a long-term basis. If you were in it for a 48-hour trade, okay, sorry. But otherwise, I think it's a nothing burger. And we're already starting to see that wane as a impact on the market. And I would expect over time, still, as we said before, the long-term ETF flows to be a net positive for the asset and the asset class.
Yep. It's interesting to see, this kind of looks like an altcoin listing, where once it lists, it kind of sells off and then finds support. And I mean, that's what we're seeing along these ETF tickers. GBTC, the one that has a little more price history, obviously, after it converted. But yeah, I don't know. I've just been kind of watching the flows, and there's absolutely been demand for these. And yeah, I don't know. I just like you said, I mean, it's just kind of a nothing burger. And Bitcoin, so far, we have the halving coming up in less than 90 days, and things are continuing as usual. So I would just encourage people, don't get overly obsessed about all the noise on mainstream media or crypto Twitter or whatever. Just stick to your plan, understand the possibilities, everything that could happen, plan and have contingencies for what you'd do if certain black swans presented themselves, and let the markets keep moving, and let the emotional people freak out and do what they do and buy into their pain.
Well said.
Yeah, man. Cool. Anything else you're looking forward to over the next week? I know we're going to be traveling over the next couple of days, but looking forward to getting back into a regular routine. What else is happening on your front?
Yeah, we'll just be still continuing to cover earnings season. Obviously, we've got the bigs still to report, some of the bigs to report later this week, and then lots of other smaller and mid cap companies. So I'll just be very dialed in for that, and doing as much research as I can, just trying to come up with more and more ideas, and yeah, hopefully some more content out on the YouTube channel very soon.
Yeah, man. Let's get it pumping.
Yep.
All right, TD. Well, thanks for being here and all the value that you add. And guys, go to wetalkmoney.com if you want to submit a question for the show. Next week, we'll dive into all the questions you guys have been putting into us, and have a great week. I'll see you guys in the community in the crypto market update tomorrow on Thursday, February 1st. So we're getting past the first month of the year and moving towards the halving.
Flying by.
Yeah, man. All right. Well, thanks, guys. Subscribe to the pod, and we'll see you next week. Take care.
Cheers.